Tell me of the adjacencies right now of China to the rest of the Pacific Rim. We have a G20 meeting. We have all the focus on the United States and China. What does this tension mean for your Indonesia?
Well, if we look at the tension in the form of creating a risk which is now materialized, we see the risk in terms of the global growth weakening and the global trade, which is also equally weakening. This is really creating more global risk for all countries, including Indonesia. But for specifically U.S.-China relation on the trade, this tariff which is being imposed, creating an opportunity for ASEAN, including Indonesia, as a place for the relocation of the industry, that then avoiding this kind of risk, that is the tariff. And that is a new opportunity for many countries, right, including Indonesia. That's why Indonesia now focusing on how we are going to improve our investment climate in order for us to be able to become a place for the production and supply chains and also take the benefit of this situation.
Is President Trump, with his mercantilism, giving you a new opportunity? We understand the adjacencies of China to low-wage Vietnam. Can you be benefited by the transfer of manufacturing processes to Indonesia, as we see in Vietnam?
We definitely can, because we also have all the necessary conditions for the investment to inflowing to Indonesia, whether in the form of infrastructure being developed in the past 5 years, simplification and deregulation, so ease of doing business has been improved, and we have also a big market in itself. So we have an attractiveness in the form of our own economy, a stability, macro stability, as well as prudential policy, which is being implemented constantly for Indonesia, and also a reputation of a place in which we improve our ease of doing business and investment climate. So we have all the necessary conditions. We are now aggressively communicating this policy, especially with the re-election of President Jokowi. That is going to be a real good moment for us.
Minister, you talked about the impact of the trade war on global growth and Indonesia's growth. What will be the impact of the trade war on Indonesia's growth this year? Can you put a number on it?
Well, we are still aiming for 5.3%. The first quarter, we are growing at 5.07, which is also a combination of seasonality as well as close to the election on April. We see that the implication of this trade war and weakening global economy in the form of export, which is now going into a negative zone. So we have a contraction on the export on the first quarter. And that's create a dynamic also with the import, which is also going down, and the commodity price. These are all the downside risks that the Indonesia is going to face when we are talking about the projection of growth. What is our projection for growth this year? This is still between 5.17 up to 5.2%.
Bank of Indonesia has, of course, so far held off from lowering rates the way some other central banks in the region have done. With the pause from the Fed and potentially the dovish pivot and the risks from the trade war, should the central bank start cutting rates?
Well, central bank will always find the right balance within their own monetary and policy mix in order for them to be able, one, to maintain stability. That is their main important mandate, whether this is in the form of inflation as well as exchange rate. But at the same time, central bank also recognize that they also have an important role in supporting growth. And that's why what they did last week by lowering the minimum giro for this bank, the minimum reserve, that is also creating support for the growth. As of interest rate, I think the central bank will find the right timing for them, because the interest rate parity between Indonesia with other emerging countries as well as with the advanced country, especially United States, is going to be one of the indicator whether the room for the rate cut is really there. But Indonesia have a stable inflation, low at 3%, so there is always room for them to do this adjustment.
Sure, and in your sort of capacity in talking about growth, should they do the adjustment in terms of timing sooner rather than later to support growth?
Well, the growth rate is not really, well, we see that the investment can be accelerated, but we also see that confidence on the business and consumer is actually strengthened in the first and entering to the second quarter of this year. So it's not really a problem of confidence. That's why we see that the government of Indonesia will try to support this growth through our policy, both fiscal as well as structural policy. Bank Indonesia will find their balance in actually striking between maintaining this confidence while at the same time supporting growth. We see that a lot of room for them to actually maneuver within this second half of this year.
Finance Minister, what does President Trump get most wrong right now about trade, of merchant, of capitalism, of the Pacific Rim?
Well, I think we are all agreed that global growth as well as trade has created a tremendous benefit for many countries, especially emerging and developing countries. If you look in the past 3 decades, progress in terms of poverty reduction, in terms of prosperity across nations, I think that contributed mainly because of globalization and trade. And that's why the question about whether you want to see the global economy moving, prosper and becoming more prosperous in a much more even way, or it is going to be driven by only a few countries. I think that is really a choice for the United States also. United States definitely is the largest economy in the world, but United States also need to work and as well as live with the other country. And other country prosperity is not a threat for the United States. It's actually a market for many of the United States in actually expanding their investment as well as in exporting that good as well as services. So a good global growth and healthy one is going to be good also for the United States.
Minister, thank you.
Are you bracing for a weaker dollar?
Well, the dollar strengthening is a threat for many emerging and developing countries who's exposed with the foreign debt. Indonesia has been very prudent in managing our debt, including at the corporate level. But of course, weakening dollar is going to have a much more favorable situation for importing country as well as any open economy, because it's actually creating a much better environment for us to maneuver in promoting growth and stability.